Hello, everybody, and welcome to this week's UK Mortgage Market Insights for the week ending the 10th of November 2023. I hope I find you all well. In this week's episode, we're going to look at the usual swap rates and lender rate reductions. We're also going to look at some UK finance data, the arrival of a sub 5% 2-year fixed rate. We're going to delve into some Rick's commentary regarding house prices slowing. And also, we're going to touch on a housing scheme that's been introduced in Wales to help people that are struggling. We'll take a look at the Halifax House Price Index that was released this week, and it shocked everybody because, according to the Halifax, in October, house prices increased by 1.1%. Now, over the course of the quarter, there was a reduction of minus 1.9%, and the annual change is now showing as minus 3.2%. It would appear that the average house price in the UK is now just under £282,000. So what does this mean? Is this really the reality of what's going on in the housing market? Well, Kim Kinyard, the director of Halifax Mortgages, actually stated that across the medium term, with the difficulties that we're facing in the financial markets, with mortgage rates being higher than people are used to, and commentary from the Bank of England, who are saying that the base rate isn't going to reduce anytime soon, the Halifax are actually expecting that house prices will fall further and we won't start to see an upturn in prices until 2025. I have to say, I think I agree with this. It's something that I've been saying all along, that from peak to trough, I do believe that we're probably going to see 10 to 15% reductions in house values, and that the data that we're seeing from Nationwide and Halifax is only a small snapshot of the realities. The land registry data is the more reliable source of information, but as I've suggested in previous videos, there is a time lag on that data of probably around about 6 months. So we're not really going to see the true figures on house prices until probably around about the middle of next year. We're on the subject of house prices. It would also make sense to look at this report from Rick's, where they've recently stated that they believe that house price falls are actually now starting to slow as we approach the end of the year. Apparently, in October, 63% of property professionals reported that house prices were falling rather than rising. And that's actually down from last month, where it was 67% of people were reporting that house prices were falling. So it does seem that things are slowly improving, although I do still believe that house prices are falling. So sticking with a similar subject line, UK Finance also released a report this week covering quarter three's arrears and possessions data. This is a report that covers the trends of people that are in arrears on their mortgages and also those that are facing possession. The long and the short of the report suggests that people that are in arrears and facing possession has increased in the last quarter, and in fact it has increased by 7%. It seems that the majority of people in arrears are actually those in the buy-to-let sector, so it seems that landlords are actually really struggling. We were asked for our commentary on this report, and for those of you that are actually watching rather than listening, you can now see on screen that, amongst others, we appeared in two newspapers this week, The Independent and The Standard, where we were analysing the data and looking at why we think buy-to-let landlords are really struggling. And as I said, as you can see on screen, I think that the difficulties that landlords have faced of late have been immense. First of all, you had the tax changes, which means that landlords obviously can't offset as much of the expenditure against their income. And as a result, that's meant that the landlords haven't had as much money in their reserves because they've been having to pay more tax. Now, when you couple that with the fact that landlords looking to get new mortgages at the moment are facing much higher mortgage payments, it's resulting in them having to increase their rents. This then obviously has a knock-on effect on tenants because they're now struggling to pay their rent. So when they don't pay their rent and the landlord, they can't cover the void periods, because their reserves have been cut down. And this is where we're in this vicious cycle and why we're now starting to see more and more arrears, especially in the buy-to-let sector. So I know you all must be thinking, come on, Craig, it's all been depressing data so far. Where's the good news? Where's the talk of these lender rate reductions and things like that? Well, I am going to come on to that shortly. I just want to get the negative news out of the way first, and then we can focus on the positives where we look at the swap rates and the lender rate reduction. So next up, we're just going to focus on this article, which is talking about more homeowners going to be facing negative equity. And it's talking obviously about the fact that house prices are falling. Now, if you consider a couple of years ago, when people were buying properties with 90 and 95% mortgages, and we're now starting to see house prices reducing by probably 10, 15, 20% in some cases, there's a real concern that we're going to now start to see more and more people facing negative equity. This report suggests that we could see up to 50,000 homes plunged into negative equity, and this is obviously not great news. Now, it's not such a problem if people are intending on staying in their home over the long term, because clearly history has shown us that over a longer period of time, house prices will always increase. But if you're needing to move and sell and there's changes in your circumstances, in the short term, negative equity is not great news. So let's hope that these reports of house price falls slowing and that there possibly being a turnaround and house prices starting to increase over the next couple of years. Let's keep our fingers crossed that we don't see too many people falling into negative equity and having to face some horrible consequences because of that. And so last up on the negative news, I promise you, is this scheme that has been introduced in Wales this week. Effectively, for homeowners in Wales, there's been a scheme introduced. It's called the Help to Stay scheme. There's certain criteria that need to be met, but effectively what they are saying is that if people are in serious financial difficulty and they're facing repossession, they can actually take a loan, which is an equity stake in their property, up to a certain amount of money, which will hopefully clear their arrears, stave off repossession, and then over the next 5 years, there is the hope that those individuals can start to improve their situation and turn things around rather than facing repossession right now. We were asked for our commentary on this scheme, and as you can see, I personally don't think it's a fantastic scheme. We really don't know much detail about it, other than people have got to have an interview with a debt specialist to get a full grasp of their circumstances. Like I said, we don't know the real detail of the scheme. So I guess whether it's going to be good news or bad news, that's all going to be hidden in the detail. So let's move this on to a bit more of a positive note and take a look at this week's swap rate chart. So there's been a little bit of fluctuation this week. However, if you compare the current column to the one from the 9th of October, which is exactly a month ago, you can actually see that there is a vast improvement in the swap rates over the period of that month. That's why we're starting to see many more lender rate reductions. And in particular, the focus is now on the 2-year rates, where this week we've seen a lender introduce a sub 5% 2-year fixed rate, which is great news. So that brings us nicely onto this week's lender rate reductions, and there's been a huge amount of them, which is great news. So this week we've seen Coventry Building Society, the Saffron Building Society, Empowered, Halifax, Virgin, Generation Home, HSBC, TSB, NatWest, West One, Birmingham Midshires, Nationwide, Accord Buy-to-Let, and Lendinvest Buy-to-Let all announcing rate reductions amongst some smaller ones as well. This is fantastic news, and in particular, we wanted to focus on the Nationwide because this week they released a 2-year fixed rate at 60% loan to value, below 5%, which is the first time we've seen that in a long, long time. We were asked for our commentary on this by one of the industry magazines, and as you can see on screen now, we think that this is fantastic news. It's an early start to the festive season, and we really do hope that this is a sign of things to come, because typically when one lender sticks their head above the parapet, we do tend to see other lenders start to follow. So is this going to be the start of a rate war? Let's keep our fingers crossed and hope so. But obviously, as we know, nothing can be taken for granted. But let's hope that these rate reductions do continue up to Christmas and into the new year to start to boost a little bit of activity back into the housing market. So that brings us to the end of this week's episode. I hope you found that information useful, albeit some of it was quite negative. I do apologize for that. But we did finish on the positive, so it's not all bad news. I just wanted to say that obviously these weekly roundups that we do are a summary of things that have happened over the course of the week. There's lots more things that go on during the week, and twice a week on TikTok, I actually do a live on a Monday and a Wednesday from around about 6:30 to 8:30, answering any questions that you've got relating to mortgages, property, interest rates, lender criteria, those types of things. So if you've got any questions that you'd like to ask, then please go to our profile, look for our beacons link, click on that link. You'll find all of our social media channels. If you hit the TikTok one, if you go give us a follow on TikTok, then you'll get notified once we go live on a Monday and a Wednesday. And like I said, if you've got any questions that you want to ask, then that's a perfect opportunity to do so. Anyway, like I said, that brings us to the end of this week's episode. I hope you found it useful. I hope you have a great weekend. Take care, and I'll see you next Friday.